We had bid watch at 15.30.35, right? So we're obviously looking at this bottom edge for volume. We're looking for that bid watch. 15.34s is the blue candle. 15.35s, of course, is this candle here. So obviously this candle here finishes at 15.36. So this is after the bid watch. After the bid watch comes in, and you're getting that liquidity, you're getting that lower price, you're getting that volume narrative. So there's a buy opportunity coming in just here. From that buy trade, you can see if we look through this, it then says bid watch again at 15.35. That's the one we're talking about, okay? We then go into the next one. Bid watch at 15.40, bid watch, 15.40. So obviously 15.40 is the 15.39 candle, right? So bid watch comes back in again there on that up move. Bid watch comes in on that candle there. Remember, 15.39 candle finishes at 15.40. This is exactly 15.40 when the bid watch hits the gold. Now, within 1 minute, gold's flipped into an offer watch. Do you see that? Within a minute, 60 seconds later, gold's off that bid and straight into an offer. So on this candle here, gold is now hitting us with an offer watch. And in this candle here, gold's hitting us with an offer watch. So you can see how fast you've got to play this. If you're going to play the markets, you've got to understand that this is rapid-like, right? So there's the 4 trades that appeared on that screen. 4 trades. A buy trade at 14.3s, a buy trade into 15.4s, a sell trade at 16.2s. Well, that's a $200 buy-side winner. That's a $100 buy-side winner. And then 2 sell trades for $150 sell-side winner. 1, 2, 3, potentially $400 per contract in that little sequence. It was only 7 minutes long. Remember, the idea is that there should be a story behind it. We don't have to agree with all of these trades. These sells might just be the profit taking of these buys. They might not be net short. These buys might be the profit taking of an earlier short sell. They might not be net long positions. We've got to try and figure out whether we want to take these trades or not want to take these trades. We should then look at the value to see whether we want to take the deal based on what's happening on the yen and based on what's happening on the bond yields. We want to try and figure out whether these are the best trades to take. We want to trade whether we think that they are good, bad, and different. We want to zoom in, we want to zoom out, we want to get context. The buy trade looks really good. The buy trade looks absolutely superb. And then, of course, when the yen's dropping behind this, I don't really like the sells, to be perfectly honest. But if I don't like the sells, what am I going to do with those sell offer watches? Use them as profit takes. Yeah. And obviously with the profit take there, it's driven the price back down to the bottom edge. I don't see any value to rebuy it because the yen's followed us down here. So I don't see any real value to go in to get into this. So that's the only trade I would have taken on gold. I would have taken the buy trades and I would have made some nice money and I've used these offer watches to get your profits out. I didn't like the bid watch on the pullback because the yen's collapsing. So I didn't like the bid watch. So I'm going to pass on those trades without any trouble. And I'm just going to wait for something better to show up. Simple stuff, isn't it? It just brings your attention, though, doesn't it? It brings your attention to be asking that. Well, it's not you that's asking the question anymore because the question's on the screens. It's being asked of you. Do you want to take advantage of this? Is it going to be a trade? Is there any value in this bit of business for you to take a trade against? And that's all you're asking. That is literally all you're asking. They're working this RBOB, guys. They're working this. They're working this crack spread for a buy trade at 26.70 again. So we've got 13 minutes to see if they go for that crack spread, Paul. 13 minutes. Classroom is also in 13 minutes. How time flies.